Hello and welcome back. Today we're going to be taking a look a bit closer at what kind of charting packages you have in the MT5. Hopefully you've already gotten your demo account set up and installed and we are ready to go. So let's get right into it then. First of all, let's set up our windows properly. Let's get rid of all the things that we're not going to be using. Over here, let's get rid of the data window and navigator. Unless you're going to be using some particular indicators or expert advices, you don't really need it either. Let's close that one. I personally like to drag this time frame panel over here, just for simplicity's sake. And let's add some instruments. Now, if you remember from the last time, you can either add the instruments you'd want directly over here, for example, Euro USD. With .c is going to be the instrument that we want, or you can go with either Ctrl U or right click symbols and add the things that you want to add over here. So for example, let's add another Amazon stock, for example, over here. We don't want the IPOs, we might want trade on silver, and let's add Bitcoin as well. Here we go. So we've added a whole bunch of instruments. You, of course, you'd want to add your own. If you're going to be trading exclusively on currency pairs, add those ones. If you're going to be trading on stocks, add the stocks you'd like to trade. Now we are ready to go. Now, in order to see what's actually going on the market right now, in terms of technical analysis, there are a couple of options that you have over here. First of all, you can simply select the instrument, the assets that you're interested in. For example, let's take the Amazon stock. Click on it and drag it from the Market Watch window into the chart window. If you let it go right now, the chart is going to be updated automatically and you'll essentially be good to go. If that doesn't really suit you that fine, or you find it a bit difficult, you can also do another thing, which is just as simple. Right click over here and click on chart window. I'm going to open another chart window. Really simple, really easy. Now, the advantage, of course, of dragging the asset directly from the Market Watch window into the chart window is that the chart itself stays the same. So, if you remember from the last time, we'd probably want to shift the chart itself a bit to the right using this button over here with a small blue arrow. And we probably want to change the color scheme. So, right click, properties, go to colors and change the scheme to color on white. Let's do just that. Let's zoom a bit out to get a bit more context of what's going on. You can also use either these buttons over here to make the charts bigger or smaller, depending on whether you'd want to analyze the actual candlestick patterns up close or you want to see the broad, bigger picture. Or you can also just click on the data panel over here and drag it to the left, to the right. This is going to change the size of the chart as well, whatever works for you. Now, as I was explaining, there are a couple of ways you can open a completely new chart window. You can either go over here and click chart window. It's going to open a completely new chart with the default color scheme, which is not that nice, at least not for me. Or if you'd want the chart itself to stay the same, but you'd like to see perhaps some different instrument, you can simply select the asset that you want to trade and drag it from the Market Watch window into the chart window. In that way, the asset itself will be updated, the chart will get updated, but the actual color scheme is not going to be, which is quite useful. Now, let's make the charts a bit bigger and let's go through them in a bit more detail. You'd probably want to understand first and foremost, before you start to analyze the price itself, you'd want to understand how is it actually drawn on the chart. So let's start by talking about three different types of charts that we have over here. Once again, if you're going to look at the top of our panel over here, you're going to see three different chart options. The option number one is what is called a bar chart. And actually, let's start by going through this one. The bar chart is arguably the simplest one, the most intuitive one, and the way it's drawn is also quite simple. First of all, we've already talked about time frames, but just to summarize a little bit, whenever you select or you change your time frame from say M1, which stands for minute to minute, M5, 5 minute, 5 minute, 15 minutes, 30 minutes, hour, 4 hours, daily, weekly, monthly, and so on and so forth. You are effectively changing the period in which each and every single one of these band bars or candles is drawn. So if we are looking, for example, at an hourly chart, we are looking at what is happening with the price on an hourly basis. That means, let's take a look at this position over here. Over here, you could see that we've got this left tick over here. Happened exactly the 2020 0818 at 12:00, right at the midday. And here you can see that it's telling us that precisely at this point, at 12:00, the price has opened. So the hour has opened at this price. This is what you see shown by that left tick. At the end of that hour, it closed exactly at this price, where you see the right tick. So the left tick is the opening price. The right tick is the closing price of that hour. The highest point that you see of the bar is essentially the highest point that the price has reached. So when the price opened, it opened at approximately the level of 1.19. It closed at the point of 1.19358. It went to the highest point. So during that hour, the highest point that it reached was the point of around 1.19448. And also, it looks like shortly after it opened up, it went a bit down to, once again, around 1.19 also. So in the bar charts, effectively you see what's been happening from, in this case, from hour to hour, and you can see at which price the asset has opened in that particular instant and which price it has closed, as well as you can see the actual volatility of the instrument. So the green candle in this particular case, as defined by our color scheme over here, the green candle shows that in that particular hour, in that period, the price went up. Now, on the other hand, if you see effectively a red bar, that means that in this particular case, the price went down. So here you can see the left tick at the price of 1.19434. It was the opening price. So at the start of that date, of that particular hour at 2020 0819 at 2 p.m. in the afternoon, the price has opened at the point of 1.19436. It went down quite significantly to almost exactly 1.19, or 3 zeros. Quite beautiful. It also appears that shortly after it opened up that hour, it went just a bit up, exactly to the point of 1.19464, and before it closed at 1.19, almost precisely, it also went just a bit down to 1.18957. So in total, you got this beautiful red bar over here, showing us quite a strong tendency to the low of the continuum of the price. And yeah, this is how it works. So these are essentially what I call the bar charts. Now, the bar charts are not as commonly used nowadays, although if you prefer them, by all means, you can use them as opposed to, let's say, candlesticks. Candlesticks effectively represent the same change in price. They effectively show you what's going on in the charts on an hourly basis, on a 30-minute to 30-minute basis, 15 minutes, 5 minutes, minute, and so on and so forth. But with candles, effectively get this much, you could say, much more intuitive perspective of what's going on compared to the bars, which you really have to look into the ticks to see what's going on. Candles visually represent the same information as bars, but in a much more visually intuitive way. So whenever you have a green candle, in this case, of course, you might just as fine have black on white candles. In this case, for example, let's stick to them. In case of a white candle or simply an empty candle, you have a movement of price of that particular asset. In this particular case, it would be euro dollar. You'd have the movement of the price going from low to high. So at this particular instant in moment. So we're looking at this minute over here, 2020 or 8:20, 11:35. So here the price, you can see, has opened at point of 1.18387, went up to 1.18436, and there was almost no real volatility in between. So you don't see any kind of price movements to below that or much above. On the other hand, for example, here you can see totally opposite movement. The price at this particular instant, 11:31, opened at 1.18409, closed at 1.18385. So at 11:31, the price has opened at this instant. At 11:32, so at the close of this candle, it closed at 1.11385. However, during that minute, it went as low as exactly that point, which is 1.18347. So this is the kind of information that becomes really useful the bigger time frames you consider, because on minutes, of course, you have a lot of what is called market rumors, so to speak, market noise. There's not much information going down there because you've got high frequency trading algorithms, HFTs for short. You've got a whole bunch of activity going on which is not really related to any kind of conscious speculation or investments. So there are very little that can be taken directly from the minute chart unless you explicitly know what you're doing. So for the most part, if you're just starting out, you always want to go for the 15 minutes and higher. Because the less time you have, the bigger the time frames you're going to be considering. So if you only have like 15 minutes a day to look at what's going on in the charts, you'd want to go with the daily charts. No question about it. If you have some time to dedicate to this during your working hours, perhaps see what's going on during the European session or during the American one, you can go below to 4 hours, let's say, hour chart, 30 minutes, 15 minutes, totally up to you. Now, it's important simply to remember what kind of information you actually have over here, because it's going to be coming up quite a lot, and it is quite useful. In fact, one of the things that I personally could recommend you to look up into if you're serious about either becoming a professional trader or simply trading for a hobby and effectively making money on it and not just trading for the sake of spending some time in front of the charts, you'd want to consider what are called the candlestick patterns. Now, these are quite a whole different topic of its own, but in essence, these kind of charts have been around for quite some time. And what people have noticed is that when some patterns emerge, such as, let's say, the one we see over here, you've got the candle going up, then you got some uncertainty in the market over here, then you get candle moving down. When you have patterns like this, usually formations of 2, 3 candles, sometimes it can be just one candle, usually it indicates that the probability of a market reversal or some movement that's going to take place from that point forward is a bit higher. That means that effectively you can enter the market at that point, and the probability that you're going to make some money on your next trade is a bit higher than you would enter otherwise. Because of course, if you're only going to trade on probability 50 to 50, you're always going to lose because you get to take into account the spread. But if you have a studied approach, if you get your own strategy, be it based on the candlestick patterns, support and resistance levels, sort of different topic of its own, of course, it's going to improve your chances quite significantly. And of course, it's going to help you make more if you're already trading profitably. So candlestick pattern is something I could recommend you to look into on your own when you get the time, and simply study the charts, see what it's all about, understand make sure you grasp on an intuitive level the difference between the bar charts, the candlestick chart over here. I'm going to switch back to color on white because I personally prefer it a bit better. Once again, go with what works the best for you. And let's quickly go through, just simply take a look at the line chart as well for now, as it's probably the most intuitive thing and the clearest thing that can be. The line chart is drawn via the close price of that particular period. What does that mean? That means that if we are looking at the period of H1, which stands for hourly basis, each and every point of this line is going to be based on the closing price of that particular candle or the bar. So if we switch to candle once again, see at which price the hours have been closing, let's say from this period. So the price in this particular instant, 12 p.m., has opened at this point and closed at this price. That means that the line in our chart is going to be drawn through this point. At this point, on the other hand, the next candle has closed at this price since it went up. Then you got a solid red candle, quite a strong bearish movement over there, which closed at this price, and so on and so forth. So if you switch to the back to the line chart, you're going to see that the price line is drawn exactly through the closing points. So not through the opening ones, but through the closes, which is quite important. And those are effectively all the different charts that we have over here. Essentially all that you really need. If you really want to get into it, by all means. With MT5, you also have some other kind of charts, such as Heikin Ashi, for example. Also quite useful. But for this one, you'd obviously want to disable the colors for your charts completely. Now, here we go. This is another type of chart. Yet again, it's based on some mathematical calculations. These are mostly useful when you're considering the lower time frames, because Heikin Ashi really helps you to get rid of the market noise. Once again, we'll cover the topic in a bit more detail later on, but for now, just keep in mind and perhaps experiment on your own with. Right now, we've covered 4 different types of charts. First of all, you're going to have the line charts, which of course we've disabled for now. We've got the candlestick charts, bar charts, and we've got the Heikin Ashi. If you want, once again, to take a look where exactly it's located, you want to go to the menu, click on the Insert, Indicators, then select Custom, and here you can find Heikin Ashi. As you can imagine, it wasn't quite developed in the Western world, but still quite useful, especially for the lower time frames. For those of you who are going to be into scalping or short-term trading, quite useful. So something to keep in mind. So now let's delete it once again, restore the original color scheme, go back to the color candles, and here we go. Now these are the different types of charts that you have. Obviously, just by studying the charts, you can get some information, but not a lot. Usually when you trade, you've got to identify the points of entry, the points of exit, and your strategies for managing the positions that you're planning to enter or the ones that you already have. For those, of course, the MT5 in particular has got the whole charting package, starting from the most essential things you could use. So let's take a look at how you can effectively draw your support and resistance levels, or simple horizontal lines, if you don't know what that means yet. So in the panel, which you can probably find at the top of your screen if you're using the default layout. Otherwise, you can probably find it to the left of the screen, to the bottom of the screen. Once again, all of these panels are completely trackable. You can do whatever you like with them. Now over here, let's select the horizontal line and let's draw some levels. So for example, let's switch back to hourly charts. Actually, let me put it back over here. And let's see what's been going on over here. Now, I probably want to make this chart just a bit bigger, for convenience sake, and here we have a horizontal line. Now, what I personally see over here is that after the price has plunged down to this point over here, it bounced up, and it's been trading around this point, so 1.18303, for quite some time. Now, this level, which is, of course, is going to be considered a support level, since the price still hasn't went below it for some time, appears to be quite strong, and especially at this point. So what our prediction could be, perhaps for the next time the price comes down to this level. Essentially, one of two things could happen, one of three things to be precise. Either there are going to be a whole bunch of orders or positions set up at this level once again, and that would mean that after the price reaches this point, once again, the market is going to get loaded with bullish positions and the price is going to bounce high again. Or the level is going to finally break after it's been tested for 1, 2, 3, 4 times. We get effectively a false breakout, then it went back again. So if the level breaks, once again, over here, you're either going to have a very sudden break, such as what happened over here, after which we've seen a couple of tests over here, and the price simply plunged right through it. There was no retest of that level over there. The price simply went down. So the same thing, of course, can happen over here now. If the price goes down again, we've got a whole bunch of positions. Perhaps people already looking to sell their positions with euro dollar can simply plunge right down and went up. Or, of course, as we've already covered, it can come back to that level, perhaps retest it once again, come back up, and you got some nice opportunities for a rebound position. Now, this is one of the current quite strong support levels is what I see. Another thing that I personally see over here is this kind of level over here at which it's trading actually right now. So it's the level of 1.185 and 2/3. I think to be a bit, we're going to be a bit more precise, we put it at that level. So what do we see over here? First of all, it's been tested in the past. So in the past, we've had some orders, some positions of people sending the price down from it and price up from it. So at these points and these points in particular. Right now, after we've had this plunge down, the price has bounced in this kind of box for quite some time now, testing this support level and currently trending along this resistance level for now for quite some time. So in this particular case, I would personally simply stick around to see what's going to happen next. I personally prefer to enter on the retest. So either after the price breaks out of this, comes back to this level, starts to test it. At that point, I could consider taking some position down. Or if it's going to break out of this resistance level, once again, come a bit up, perhaps come back, start retesting this level once again, then I could consider some positions to go bullish. But for now, once again, we're simply exploring the charts. So for your understanding what I've done over here, I've used one of the things that we have over here called Draw Horizontal Line tool, which allows you to pinpoint and to keep track of the different levels at which perhaps you might consider to enter or to close your positions, of course. That is just how it works. All the lines that you're going to put on the charts can be removed at any point in time, completely up to you. And this is when it comes to the horizontal lines. Now, another thing you could use, of course, is the usual trend line. As you know, there are different kinds of support and resistance levels. Some are straight, which are usually the strongest ones, and some effectively are not so straight. Let's put them that way. So trend lines effectively allows us to draw support and resistance levels, or perhaps simply some guidelines for trading for the market movements that are not effectively horizontal. So in that case, if we were about to trade perhaps at this point, at that point we could have considered take this particular position a bit down, since there was quite a strong movement up, quite a bullish one. We've got to retest after effectively this trend line was formed via this and this point. We've got a third test over here, then the price went up quite beautifully. And at that point, we've got a small retest over here, but at this particular point, of course, the level was beginning to extinguish itself already. And as you can see, shortly afterwards, after a test of that level, we've got a small triangle drawing over here, and sure enough, you get a beautiful breakout of here. And if you would have entered, well, maybe not here exactly, because it was a bit risky, but perhaps if you could place a sell stop order at this point, 1.19238, hey, you could take some nice ride on that position for solid 860 points. With one lot, that would be a solid profit of $860. And that's 0.73%. I mean, not that much, not that little, but hey, a solid movement. Something to look forward to in the future. So that should be it for today. We've covered the pure basics of the chart. Bar charts, the simplest one. Candlestick patterns, the most commonly used. Line charts, if you're going to use them. Let's make sure once again you remember where you can find the Heiken Ashi if you're going to use them. Once again, menu bar, insert, indicators, custom, Heiken Ashi. Just click OK. There you have it. Quite a beautifully done chart type. Just make sure you don't use it for the bigger time frames, because otherwise you're going to lose quite a lot of information that is quite valuable from the hourly charts and above. We now then know how to draw horizontal lines to take possible and future entry points and exit points, as well as how you can draw the trend lines, which are also quite useful to track the movement and the possible breaking points of the trend. Hopefully that was useful. Stay tuned for more.